One of the fascinating things last year was gold, because every time I spoke to a gold bug, whether it was deflation fears, inflation fears, any story you could talk of was good for the gold price, which seemed to me to suggest maybe we're in a strange era. We're going to get more on that. Stephen King is still with us, global economist at HSBC. But more importantly as well, Richard O'Brien, CEO at Newmont Mining, one of the world's biggest gold producers, is with us. Richard, in the last few weeks, we've seen a little of the gas coming out of gold. Is 2011 going to be, on the price level, a more difficult year, do you think?
I don't think so. I think we're going to see a little bit of volatility, and we have seen a little come off, but if gold stops here, we're 10 years into a bull cycle for gold. If it stops here, it'll be the shortest bull cycle ever. And I just don't foresee that with inflation, as you talked about, with the prospects for a burgeoning population in the world. I think we're going to continue to see pressure from government deficits. So I actually foresee that we're maybe halfway in the gold cycle.
Can we split out fundamental demand from speculative and investment demand or not? Can you? Is that possible to work out?
Yeah. I'll give you my view. So fundamental demand, supply and demand. So last year, for the first time in 10 years, we saw an inching up of gold supply from miners. My view, it will continue to be a deficit going forward. So with that, I think we're going to see less supply. On the demand side, last year central banks were buyers for the first time ever. So I think what we're seeing now is we're going to see continued demand for precious metals as an investment, and that will, with jewelry increasing, I think, in demand from places like China and India as their economies grow, I think we see a picture of short supply, increasing demand.
What's the HSBC view on that? Is he right?
I think he probably is right. We think that gold will not do too much this coming year, but longer term, I think it's still a very exciting investment opportunity. And one reason for that is that you're seeing all these experimental policies coming through from central banks in the West. And we're talking about central banks buying gold. They're buying it because they're not so sure that the dollar as a reserve currency is quite as reliable as it has been in the past. So what else do you buy? Well, the euro doesn't look too great. The renminbi isn't in the position yet to become the world's reserve currency. So if you can't buy the traditional paper reserve currencies, what are the other alternatives? I think for many investors looking for an insurance against all these risky policies, these experimental policies, and they're saying, let's buy some gold.
Christine?
Hey, Richard, my question is to you. It's interesting you talk about demand from central banks. I'm talking specifically about China. We keep hearing about China diversifying into gold. What sort of demand are you seeing coming from China?
Yeah, actually two kinds of demand from China. First is on the jewelry side, some step up in demand for that. But importantly, China is the world's largest gold producer. And what's interesting about China is almost no supply of gold comes out of China into the world. So it's all really held in China. And I think with that, what you see is the central bank diversifying, as was just suggested, from U.S. dollars into gold just by holding what they produce.
I was talking to Cynthia Carroll yesterday here at the meeting, and the big problem all miners have, of course, is costs are going up, whether it's energy costs, employee costs. So what's happening on that front? How are you managing to deal with it?
Yeah, good question. So costs clearly were impacted by energy costs, and a lot of discussion around Davos about the cost of energy. Are we appropriately pricing carbon into the cost of energy? So we see continued inflation on that side. And energy for most of us is about a quarter of our costs. The other half, as you point out, is people. And depending on where we are in the world, we're going to continue to see pressure. So my view, mining costs are going to go up this year, maybe 10%. I think we're probably in the 500 sort of average cost in the next 2 years. I think we'll continue to see inflation in those costs as grades go down over the time period.
Yeah, I think exactly right. That ultimately the key thing to remember here is that central banks can print money costlessly. It costs nothing to print money. Digging gold out of the ground, doing that sort of thing, costs a lot of money. And if you've got inflation picking up, wage costs picking up, of course, again, it makes a bet that says that gold does better than dollars, does pounds, euros, and so on.
How much is this inflation that starts right at the pit face here, how much is that going to increasingly feed through? I mean, we're seeing the pressure it's putting on the likes of the Bank of England, the ECB is talking to worry about as well. And where does that end?
Well, I think ultimately for the central banks in the Western world, they have to make a difficult choice. They've effectively ramped up inflation in other parts of the world which they weren't necessarily expecting. There's a feedback effect into the Western world because of rising headline inflation. The question then is, to what extent does the rising headline inflation ultimately lead to a rise in inflation expectations, or instead to a slowdown in growth? And the key thing here is that wages are not rising in the West. but inflation is. So prices are going up, wages are not. Basically, it means that people's real incomes are being hit, and that's just ultimately the Western world doesn't do quite so well. But the catch in the story is that even if the Western world isn't doing very well, it's the emerging nations that are growing very quickly, that will continue to grow quickly in the future, and they will have the demand for gold in the future.
So, Richard, the outlook for this year for you guys?
Yeah, I'd say we're going to see some volatility, but 13 as a low, 1,300. I'd say we could get as high as 1,500, but quite a bit of volatility, and maybe 1,500 is next year. So I kind of agree that we're going to see kind of a 13 to 14 this year, maybe escalating after that.
Which you could see. Thanks very much, Steve, for joining. Richard O'Brien, CEO of Newmont. Stephen, you're going to stick around for a little bit.